The stock market has less than 24 hours before this happens. And no, I'm not talking about the FOMC minutes coming out tomorrow at 2 p.m. Today, the Fear and Greed Index, we're able to get out of fear territory back into neutral territory. Are the bulls getting ready to charge to make the new all-time highs? Today, we were able to get our first down day in the market, and I got to be honest with you, it's not all that exciting, all right? Basically forming a candle of indecision out here on the S&P 500, but technically it is a down candle. So out of the last 9 days, we have now had our first down day. We look at that, when we come over and look at the dollar index absolutely giving it up, down 43 cents on the session. We take a look at the precious metal gold trying to make it way all the way up towards the ABC pattern completion. However, we see we have a selling tail on the top of that candle. Now that is problematic. One, because we had a hanging man type of candle the day before. Then we get this inverted hammer. When we get these candles back to back, that could be problematic out here for the gold bulls. Then we come over and take a look at crude oil, another down day for crude oil. And I got to be honest with you, if 72.34 does not hold, watch out, crude oil is likely going to go ahead and flush through the lows. Now, let's not forget, we have Jackson Hole, meaning a plan to cut rates gradually is emergent. Now, Jay Powell already told us we're going to be cutting rates without saying we are most certainly going to be cutting rates. When we look at the Fed watch tool, we can see the market is aggressively pricing in rate cuts. However, we got to be very mindful because when the Fed goes on an aggressive rate cutting campaign, history has shown us that the market has suffered severe pullbacks when this has occurred. Now, this is what we really got to be concerned with for tomorrow, and that is going to be payroll data revisions could rattle bond market ahead of Powell's Jackson Hole speech. So Wednesday's revision of annual payrolls could be double anything that we have seen in recent years. And what they're actually going on to say is estimates suggest that non-farm payrolls from April 2023 to March 2024 will be revised down by a total of 600,000 jobs. So when they keep telling us how many jobs are being created, you know what? We are now finding out that is nothing more than a bunch of lies. But hold on, could it be more than 600,000? Some are suggesting it could be as much as 1 million jobs. And that would be huge out here for the jobs market. And that actually suggests that the politicians have been lying to us. Now, does that really surprise anybody that the politicians out there or the powers that be would actually lie to us measly little peasants? Now, let's not forget, we still have earnings coming out tomorrow. We have Target, Macy's, TJ Maxx, all before the bell. Then after hours, we have Snowflake, we have Zoom, just to name a few. And we're going to see, will these earnings be enough to sway the markets one way or the other? We come over and look at Walmart. Walmart today making another new all-time high. Can't stop, won't stop, continues to go higher. However, we look at Tesla. Tesla today was down slightly. We look at Apple. Apple barely able to eke out a gain, but look at the difference in the MACD indicator, right? We're back up here at these elevated levels and the MACD indicator is barely pushing off the recent lows. We come over and look at the king of AI, NVIDIA, today having an inside day, meaning the low was higher than the low from the prior day. The high was lower than the high from the prior day. And what this sets up is for tomorrow, we have the potential for a breakout or breakdown from this pattern. Now, let me know in the comment section down below, do you guys think NVIDIA will be breaking out to the upside tomorrow? Or do you think it's going to come tumbling lower? Now, when we look at the economic calendar for tomorrow, we really only have two things on deck. 10:30 a.m., we have crude oil inventory numbers coming out. Then at 2 p.m., we have the FOMC meeting minutes. Now, I don't really expect the market to have a huge move after the meeting minutes. Jay Powell has answered most of the questions during the press conferences. Now, when we come over and look at how the indices fared across the board, the Dow was down 61 points. The NASDAQ was down 59 points. The S&P 500 was down 11 points. The Russell 2000 was down 2.43 points. However, when we come over and look at advancing issues versus declining, we had 64% of issues declining for the day with only 32.8% of issues advancing on them. Then we come over and look at the sectors, and energy was the big laggard out there. And we look at the sectors in the green. Communication services, barely in the green. Consumer defensives, barely in the green. Then we had healthcare up 0.32. So when we come over and look at a chart of the diamonds, the Dow real quick, notice we're starting to come right back up to the area where the whole decline actually started. We've made it well past the 78.6, which really suggests that we're probably going to, at minimum, make a retest of this recent swing high before we had that drop in the markets. Then as we look at the chart of IWM, the Russell 2000 small caps, what do we see? Well, we actually broke below the low of the candle from yesterday, and we got to be open to the possibility of the gap from last week coming back and getting filled, 206.71. And if we fill that gap, that doesn't mean that the market cannot go ahead and continue to rally up towards all-time highs. If we actually grab our Fibonacci extension tool and we go ahead and we measure A to B and we project, act like we're going to pull back down here, fill in the gap, that would give us a price completion right up here near the recent highs at about $225. Then as we come over and look at the QQQs, a candle of indecision. This is basically going to be the theme that we see across a lot of the indices out here. And with a candle of indecision, what are we expecting? Is this nothing more than a pause in the markets waiting for not only the FOMC minutes coming out tomorrow, but also those job revisions to come out? And if so, will either of those two catalysts be enough to get a little bit of a retracement back down? Keep in mind, we have two very large gaps out here for the QQQs that still need to come back and get filled. And one of those gaps are lurking right near a high volume area on the composite profile at about 463.13. I want to make everybody aware Apex 7 is 71% sale off all their valuation accounts, past in as little as 1 day, 50% off reset fees. And if you're a trader that likes to trade the larger accounts like the 150K account, the 250K account, and the 300K accounts, the activation fee for those accounts are only $40. Now, if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. On the 4-hour chart, we are finally now starting to see a little bit of an arcing effect on the MACD line. This is the first sign that we're starting to see any type of weakness, and it's coming right around where we see a high volume area on the composite profile. Out here on the 1-hour chart, we were talking about this morning that we had the MACD divergence playing out where prices continue to make new highs. MACD indicator is no longer confirming those highs. Then out here on the 30-minute chart, you can see the divergence is even more evident. We see right over here that correlates with this high over here. The MACD indicator was substantially higher than where it is even today. Even today, we saw the MACD indicator rolling over even more so. Now, when we look at the profiles for today, I'm going to classify today as a D as in dog shape profile, which is what I talked about this morning. I expect a D as in dog shape profile. Probe a little bit higher, probe a little bit lower, and now that is going to set the stage that tomorrow we could get that breakout or breakdown from this pattern. Now, as we come over and look at the futures markets, you can see we still have not been able to take out the untested point of control above us at 19,962.50. But you can see we're having a hard time really pushing up and above this high volume area on the profile. So do we start to pull back? Keep in mind, last week's value area high still has not come back to get tested. Since that's an untested value area high when we closed above it, that is highly probable that this week or next week, we're going to see that test come into play. Then as we come over here and we look at the 30-minute profiles, what do we have? We have that D as in dog shape profile. However, today we did not make it down towards value area high at 19,692.50. However, the trade that I left you guys with last night on stream came right down to where, it took out my target, actually went a little bit lower from that price point. So if you guys were left on stream last night with a cliffhanger, well, you guys know the outcome. I did not get filled on the second target, which we'll talk about tonight during the live stream as well. Essentially, we came down to that level, boom, we popped back up. So today, we basically spent a lot of time auctioning this mice development area on the profile from the prior day. I still believe that tomorrow is probably going to be the day, or even tonight, where we come down and test this untested value area high, and we'll see, do we actually go even lower, potentially taking out that untested point of control at 19,609. Now, when we look at the volume profile levels we'll be dealing with tonight, value area high will come in at 19,866.50. The point of control will come in at 19,821.50. Value area low will come in at 19,785.00. Right now, we're dead smack in the middle of the profile, but if we start breaking value area low, I do want to play for a test of today's lows. Then I want to push runners down towards value area high from the prior day, and then maybe another runner down towards the untested point of control at 19,609. But note, if we start breaking value area low and we start coming back up, then I need to take off my bear hat, put the bull hat back on, and look to play the rotation values on the way back up, along with targeting the high out here from last night as well. Just like if we break above value area high and we start coming down, I then want to play point of control, value area low as potential targets to the downside. Now, as we come over and look at the SPY real quick, what do we see? We had that big rocket ship on the way up over the past, 9, 10, 11, 12 days. And now we finally had a small little down candle. Now, is this just a little pause before we're going to go ahead and run, fill in the gap and taking out all-time highs? Or do we start to get a bit of a pullback, maybe pulling back towards this high volume area at 544.58? As we look at the 4-hour chart, MACD indicator is starting to get a little bit of a roll effect, but it's still in the early stages. On the 1-hour chart, we have clearly had the MACD already rolling over. And as we were making new highs, the MACD indicator was failing to confirm those new highs. Now in the 30-minute profiles, you can see that today we took out the point of control. However, we never made it to value area low or even to this next high volume area at 556.57. Those levels that we talked about last night and this morning will still be in play tomorrow if we are violating the volume profile levels. Now, as we come over and look at the S&P 500 futures markets, notice we were unable to test this untested point of control up here at 5648.50. And now will this actually start to turn on the way back lower? Keep in mind, I want to pull a Fibonacci retracement from the low to the recent high that we had overnight. And we can see the 38% level comes in at 54.68. Now that could be a key level. Now, if we only come down towards that level, that could be a minor retracement and what could still be a very bullish move in the market. Keep in mind as well as we do have this minus development area within last week's volume profile, which is likely going to come back and get auctioned in the near future. Then as we dive down, look at the daily profiles, notice we never took out yesterday's point of control at 5601.25, but we were able to take out the untested value area high at 5620.25. Now, with that being said, we look at today's profile. It's a D as in dog shaped profile. So I expect the range expansion for tomorrow. Will we break to the upside? Will we break to the downside? That's still to be determined. And what we can do is we can pay close attention to the volume profile levels. 5616.00 is going to be value area low. The point of control will be up here at 5620.00. Value area high will be 5629.50. So how do I want to play this? We start breaking above value area high. I do want to look for a retest of the highs from today. But if we start breaking above value area high, then we start coming back down. I then want to target the point of control, value area low, and then down here towards this point of control at about 5601. Keep in mind, we still want to be mindful of the minus development areas on the profile from the prior day. If we actually look at where we came down to today, notice today we came where? Right to this high volume area. We did not even make it down here towards 5605. So we need to still be paying attention to the minus development area right over here, as well as the minus development area from about 5595 down towards about 5592. Then as we zoom out, here's where we can see that minus development area. And this will be an area that will come back and get auctioned at some point. 5493 is going to come back at some point. Now, is it going to be this week? Is it going to be the next week? The jury is still out on that. Now, if you're sick and tired of your stops being hunted, make sure to watch this video right here.